Nick Robertson reporting from Ukraine. Here at home, inflation, the economy, and a debate over recession. Michelle Rook takes a closer look at the impact on agriculture. Michelle?
Clinton, the Fed's action to raise interest rates and a negative second quarter GDP number have many experts saying the U.S. is in a recession, while others argue it's not because of factors like the low unemployment rate. So we looked into some of the trends and what it means for farmers and consumers. The U.S. has had 2 negative quarters of GDP, so that meets the textbook definition of recession, right? Actually, the National Bureau of Economic Research makes the call.
They're really looking for more signs of economic pain than what we're seeing to make that call.
And with low unemployment, he says that may be an offset. Despite that, consumer spending is slowing and shifting, even for food. And historically, consumers also trade down at the grocery store, especially from high cuts of meat to lower alternatives like ground beef.
So I expect to see some maybe a little bit of a drag in the livestock sector, a little bit of a drag in alternative proteins, and a little bit of a drag in some of the fruits, nuts, and higher order goods.
Restaurant sales are already down 10%, which Bailey says is hitting the dairy sector, with cheese sales trailing down.
And we've seen our class 3 milk prices, which is the price used to make cheese, is down about 10% since June.
Economists are also keeping an eye on possible global recession, as it can slow demand, especially if the U.S. dollar becomes a safe haven for investors.
As the dollar strengthens, commodity prices tend to fall.
At the same time, both experts see energy prices continuing strong and higher input prices, but say tight global supplies for especially grains should keep commodity prices intact. The good news is agriculture is generally more buffered from recession, and so far, even given the current CPI and GDP data, experts aren't suggesting a deep or sustained economic downturn.